Hi everyone, welcome back to the USCPA classes for financial accounting and reporting. In this video, I'll be walking you through in detail about accounting for changing price, which is like inflation impact, and there we'll be covering general price level accounting. So this is part 1 of accounting for changing price. We have part 2 which is coming just after this to complete on this topic. So let's dive into part 1 of accounting for changing prices.
Limited application of these topics for accounting for changing price, right? But it's part of the curriculum, so you never know when your luck hit. So we should be covering all the items, right? So overall, in accounting of changing price, there are 3 topics we'll be covering. First one is general pricing level of accounting. Second is current value accounting, and third one is the disclosure part, which includes supplementary disclosure as well as certain additional disclosure. So actually this accounting standard codification is not mandatory disclosure. It's recommendatory but not mandatory. Hence, like I have not seen much practically in any company, too much company is doing application of this standard, as well as like in exam purpose also I have not seen very much question, even though in our surgeon material also I have not seen much question relating to this. So we'll be going through the concept in detail, but to be very honest, I have not seen like from last 5 year AICPA examination also I have not seen like much
Yes,
question coming in.
यस ये टॉपिक भी और पार्टनरशिप दोनों टॉपिक्स ऐसे हैं जो कभी टेस्ट होते नहीं है इवन बाकी
Partnership?
मटेरियल्स में भी देखेंगे
Mm-hmm.
मतलब बेकर में भी नहीं है शायद वाइली में भी नहीं है दोनों टॉपिक्स नहीं दिखते कहीं पे भी
Okay. Yeah, but it's part of your blueprint. If you see like AICPA blueprint, so it's being there, so you never know when examiner can ask the question. So it's good to cover though, right? And then at least you have an understanding. So if any questions come in your examination by any chance or like by chance, you will be getting advantage compared to like other students, right? So first, like high level accounting of changing in prices. So changing in prices basically like on account of inflation impact basically, as there is like inflation year over year. So purchasing power of the people generally get reduced. So what this standard says like how to adjust this changing prices to reflect the true value of the financial statement compared to the historical financial statement, right? For example, if you have a financial statement of previous year and where you have recorded, let's assume $1 million of revenue, and there was, let's say, 10% of that, maybe $100,000 as a net profit you have earned, right? So now in year 2, if you earn, let's say, $1,050,000 as a revenue, and there is $105,000 of you can say net earning. But if the inflation is, let's say, 10%, is it like your real earning more than previous year or less than previous year? Are you getting my point? What I'm saying? Kashish, Ayush?
so can you repeat once please
Yeah, maybe I can just open an Excel sheet.
Sorry.
So what I was saying.
So nominal means with inflation and real means without inflation, right? Am I
No,
correct?
we come to those things, nominal and real and everything. So, for example, in year 1, year 2, this is your revenue. Let's assume you have $1 million of revenue, and here you have $1,050,000 of revenue, and you have profit after tax, let's say $100,000, and here you have $105,000, right? Let's assume this is your numbers given in financial statement, right? And then they said inflation at the rate of 10%. So is this growth? I would say, is this growth? This 1 second is equal to this minus this divided by this. So this is your growth in terms of revenue, in terms of profit after tax. So this is your growth. Is this growth, you see, like, is actually growing in purchasing power, or it's not growing in line with the purchasing power?
So not in line,
Not in line, right?
10% exactly.
So what you can purchase in 100,000 at year 1, so you may be required to purchase the same amount 110,000, right?
Yeah.
Right, this much amount you will be required, and if there is a growth of 5%, then it should be this amount, right?
Yes, sir.
Yeah.
So
Yeah.
this
Over and above that, yeah.
yeah, over and above that. So this amount actually not reflecting the real growth, right? Whereas it is reflecting a growth, but actually it's not considering the impact of inflation. So this, like we have seen in a very normal economic condition, right? Have you heard the concept of hyperinflationary economic?
श्योर, मतलब ये चीज आईएफआरएस में होती है, मतलब एक स्टैंडर्ड
What
हुआ
is
करता था आईएएस 21 हाइपर इन्फ्लेशनरी, मतलब सर जहाँ पे एक्सेस इन्फ्लेशन है, बहुत ज्यादा है, जैसे कुछ कंट्रीज हैं, ठीक है, लेकिन बहुत लिमिटेड चर्चा है, सीए फाइनल पे भी बहुत कम है, और आईएएस 29 जरूर है, जो चीज मतलब सुनी है आज तक, लेकिन मतलब उसकी अकाउंटिंग कहीं सुनी नहीं है। हाइपर इन्फ्लेशनरी का मतलब जैसे नाम से समझ में आता है कि ऐसी कंट्रीज है, ऐसी इकोनॉमीज जहाँ पे बहुत स्टीप मतलब प्राइस राइज होता है। सपोज आई गेस स्विट्जरलैंड आई गेस है सबसे महंगे में, शायद वही है, ठीक है, और ऐसे कुछ कंट्री।
हाँ, आयुष, आकाश, आशीष, what is
Hyper-
hyperinflation?
सो आई एग्री विद शिवम, मैंने भी आईएफआरएस में पढ़ा था हाइपर इन्फ्लेशनरी। सो बेसिकली वही है, लाइक श्रीलंका टाइप इकोनॉमी हो गई, जहाँ पे कोई प्राइसेस और करेंसी कुछ भी स्टेबल है ही नहीं। तो उस केस में अकाउंटिंग, क्योंकि नॉर्मल अकाउंटिंग वोंट वर्क, उसके लिए एक अलग स्टैंडर्ड है प्रॉपर, कि भाई इन केसेस में जहाँ पे बहुत ही हाइपर इन्फ्लेशन है, मतलब ट्रिपल डिजिट इन्फ्लेशन है, जो आपने बताया था हाइपर इन्फ्लेशनरी, उन केसेस को कहते हैं जहाँ पे आई थिंक 100% इन 3 years ऐसा कुछ वाला रेशियो होता है।
सर 50% अप्रोक्सीमेटली जिसमें इन्फ्लेशन है
100।
एवरी मंथ, उस केस में वी कैन से कि हाइपर इन्फ्लेशनरी सिचुएशंस हैं एंड प्राइसेस ऑफ गुड्स एंड सर्विसेज आर राइजिंग एट अ वेरी स्टीप रेट, वही वाला जो 50%।
Yeah, Kashish.
Sir, now we can take an example of पाकिस्तान और अफगानिस्तान का भी ले सकते हैं, where सर हाइपर इन्फ्लेशन मतलब बहुत ज्यादा है, गुड्स एंड सर्विसेज के प्राइसेस जो है वो बहुत रेडिली इंक्रीज हो रहे हैं सर, बिकॉज ऑफ एक तो वॉर जोन की वजह से भी हो सकता है, एंड उनकी जो मतलब जो लोन्स वगैरह हैं वो ऑब्वियसली सर बहुत ज्यादा ही है, वो आईएमएफ से वो लोन वगैरह लिए हुए हैं, तो सर उसकी वजह से भी उन बहुत ज्यादा प्रॉब्लम क्रिएट होता है उन कंट्रीज को। सो आई गेस हाइपर इन्फ्लेशन सर उसी का ही वन ऑफ द एग्जांपल है ऐसी कंट्रीज के लिए।
Yeah, so more or less, like you guys are right. So, but thumb rule, like which Ayush said, is like if in any economic inflation is more than 100% in 3 years, total accumulated inflation, then that economic is considered as hyperinflationary economic. Right? In those kind of economic, for example, inflation rate is, let's say, 40%. And if you are growing at, let's say, 25%, right? So even though you are growing at 25%, but you are not meeting the requirement, right? In that case of scenario, you are still actually not growing, even though your numbers are looking big, but the actual purchasing power of your company or actual purchasing power of your employee is going down, right? So this standard says how we should take the impact of the same in the financial statement, right? If you see like IFRS says you can choose or you can shift your currency from, you can say, uh, uh, local currency to functional currency if that is more stable, right? For example, like when I was in Nigeria, so at that point of time, like when I gone over there, so naira per dollar, the naira per dollar rate was around 280 to 290 naira per dollar. But within 10 months, I have seen that has gone to 450 to 500 naira per dollar, right? That reflect the hyperinflationary economic environment. So in that case of scenario, what we have changed the functional currency from naira to dollar, because dollar is like more stable currency, and most of the transaction, like more than 50% of the purchases, more than 50% of the compensation, more than 50% of the expenses, more than 50% of the sales must be in dollar. Then only you can change the functional currency. So we have done all this evaluation, and finally we reached to the conclusion that we can change the functional currency from local currency naira to US dollar. And finally we have changed to dollar, right? So that has helped us in stabilizing the overall financial statement and look at the real numbers, which is like growth on dollar over dollar rather than naira over naira, because naira over naira was not reflecting the true value. Make sense?
Yes.
Hmm? So
Yes,
now
yes.
Yes.
just keep that concept in mind, and then if you evaluate or if you look at it, this standard, which is accounting for change in prices, you'll be better in a better position to appreciate it. So
So
first
just
one
one
is
doubt.
like, mm-hmm,
और सर पहले ही कॉन्सेप्चुअल फ्रेमवर्क में इवन आकाश और कशिश विल अग्री कि सबसे पहले जो अपन ने बात पढ़ी थी कि इन्फ्लेशन इज नॉट टेकन इनटू अकाउंट, तो सर ये एक्सेप्शन है ओनली फॉर हाइपर इन्फ्लेशनरी इकोनॉमीज, या फिर मतलब कभी ऐसा हो भी सकता है कि आप इन्फ्लेशन को टेकन मतलब इट विल बी टेकन इनटू अकाउंट? सबसे पहले कॉन्सेप्चुअल फ्रेमवर्क में अपन पढ़ते हैं ना
mm-hmm. No, I
कि
didn't got
इन्फ्लेशन
your
को अपन नहीं
question.
दिखाएंगे। एक सेकंड सर, सपोज जैसे सर लैंड की वैल्यू 10 लाख रुपए, ठीक है, वो
Mm-hmm,
अप्रिशिएट होती है, ठीक है। अब आप मतलब 2 साल बाद खड़े हो, उसकी वैल्यू 12 लाख हो चुकी है।
mm-hmm,
अप्रिसिएशन या रीवैल्यू अपवर्ड यहाँ पे अलाउड नहीं होता यूएस गैप में,
mm-hmm.
तो इन्फ्लेशन को आप नहीं दिखाते अपने फाइनेंशियल्स में, मैं ये बोलना चाह रहा हूँ, तो ये उसका एक्सेप्शन हो गया ना एक तरीके से।
Yeah. Two things. This standard is like a recommendatory standard, and this is not mandatory standard. One thing. So it says like for the general inflation, you can consider the impact, and this is how you should be considering the impact, and you will be providing such kind of disclosure. If you are using this accounting standard, then how you need to apply this accounting standard. Second is like hyperinflationary is another example I've shared, which is like extreme case scenario. Like in normal inflation in US, normally it is 3 to 4% inflation. But if you see the country like we were discussing, Sri Lanka or maybe like Vietnam, Philippines, right, Bangladesh, or maybe Nigeria or Kenya, such kind of country, they are going through like hyperinflationary economic environment. So in that case of scenario, this accounting standard is you can say more required.
ओके, रिकमेंडेटरी है हाँ।
Yeah, it's a recommendatory but not mandatory. But if you are applying it, how you need to apply it, so that guidance will be going through,
ओके,
right?
ठीक है सर।
And where it is more important to apply this, where we have like hyperinflationary economic environment.
एग्जैक्टली।
Right? So now
Yes, sir.
coming to the first part, which is accounting for change in price. This is majorly because of inflation impact, like we have discussed, and the majorly it has two things. One is general price level accounting, second is current value accounting. In US GAAP, we call it general price level accounting, but in IFRS, we call it constant purchasing power accounting. So that is the difference in terms of terminology, right? Whereas current value accounting, we call it in GAAP, but in IFRS, we call it current cost accounting. So that's a terminology difference, but overall, you can say the calculation and impact is same. Right. So first, let's understand what is general price level accounting, or you can say constant purchasing power accounting as per FASB. First is restate the financial statement reporting item basis change in general purchasing power. So as the purchasing power is changing, you need to do restatement of the entire financial statement, which include your balance sheet and profit and loss account, as well as cash flow statement. So when you are going for a general pricing level accounting, so what you need to do, you need to restate the entire financial statement based on the purchasing power, right? So every country issue a purchasing power index, right? PPI. So you can see for any country or any economic conditions, so you can easily find PPI, which is purchasing power index, right? So you need to take like previous year number and current year number to identify what is the inflation impact from previous year to current year. And that impact, you need to make an adjustment to the financial statement, right? So this adjustment is useful in a period of high inflation when it would otherwise be difficult to determine the true financial condition of the business. So when we are making this adjustment in the period where inflation is high, if 1%, 2% is inflation, then like generally it's not required because probably it may not have material impact on the financial statement. So when you are applying any new accounting standard or when you are applying any accounting standard for any particular accounting period or for any particular accounting matter, you must consider whether it will be having any material impact or not. If it does not have material impact, then you can ignore it. So same is the situation here. If the inflation is small, generally it is not considered to take the impact of the same in overall financial statement because the cost of changing everything would be much higher than the impact, or you can say benefit, of application of those accounting standard codification. So whenever you are required to apply accounting standard codification, you must look at the materiality of the impact. If the impact is material, then only you will be considering. If the impact is not material to the financial statement, then you could ignore it, right? Restatement of financial statement under the general price level principle is achieved through the use of index number applied to financial item to account for the changing value of the monetary unit. So simple, like for example, previous year the index value, if you go to the Google purchase price, so in this way you can comfortably find. So there are many statistical which provide purchase price index. So you can do Google it out. That will help you giving like the overall price index. And so for example, US producer price index current level is this, up from this. So last year it was 140.31. Sorry, last month, and 1 year ago it was 14016. So it has been moved from this number to 14050. So this way you need to do the accounting for the changing. So that means previous year number you can upgrade them, or the current year number you can reduce to the previous year to make it more comparative. So generally what we do, previous year number we upgrade so that there would be an apple to apple comparison. Right? So this is like high level definition of general price level accounting. So we'll be discussing one by one, and we have an illustration also to discuss in detail how to do the accounting of the same. Right? On the other hand, current value accounting, which is current cost accounting in IFRS, we say the terminology is different, but the concept is same. So financial statement items are reported at current value determined by several valuation approaches or valuation methods are there. So current value accounting is the concept that assets and liability be measured at current value at which they could sold or settle as a current date. For restatement under the current value accounting, financial statement item needs to be periodically remeasured in the terms of changing value. So if there is any change in value, then periodically you need to remeasure that to keep it to the current value. So current value means like today, if you are replacing anything, for example, you have a machinery, right? And this machinery you wanted to replace with the new machinery of same model. So what will be the value of the same? So that count as a real value accounting. Whereas general
उसको सर
price,
रिप्लेसमेंट कॉस्ट भी बोलते हैं ना उसको?
yeah, replacement cost, yes, you can say so, yes. So the current value accounting is more focused on replacement prices, whereas general pricing level of accounting is more focused on purchase price index impact. Right. So note over here is the two approaches, general price level principle and the current value accounting, result in a different financial statement. So both of them will give you different impact on the financial statement. Right. They both are allowed as per GAAP, but again I'm saying this is recommendatory, not mandatory. Right. And they both will give you the different value, because the financial statement which you are making for the general principle, general price level principle, that will be based on the purchase price index, right? Whereas if you are making a financial statement on the current value accounting, that will use the replacement price. So as a multiplier we are using, or as a measurement, you can say monitoring unit which we are using is different, as it will give a different financial statement result. It will not give the same financial statement. And the impact of change price does not apply uniformly to all the financial statement item, which is typically the case. Whereas in the general price, you apply the price index uniformly to all the balance sheet item as well as income statement item. But in change price method, so there would be different pricing, different replacement price for the different assets and different replacement price for the different liability. So it cannot be uniformly applied, right? Makes sense? High
Yes,
level,
sir.
any doubt so far?
No,
Ashish,
sir.
No, sir.
Gurmehar?
No, sir.
Okay.